Okay. One, two. Okay. Ahmed Khan is on the way. Hello, good morning, Ahmed. Okay. Where's your friends? Where's the rest? You come later. Okay. Okay. Sarah, you are Christian, right? Hindu. So, what's your name is Sarah Juliet Victor. I thought you are Christian. Okay. So happy belated Deepavali, Sarah. Okay, Ahmed, can we continue with the chapter 3? Are you ready, Ahmed? Okay. So this chapter 3 is regarding the accounting equation and accounting classification. Okay, before this we are learn about what is the definition of accounting stuff. Ahmad, can you revise that? Okay, what do you understand about accounting? Can you share your opinion with Sarah? Mhm. I, I'm asking I I'm asking Ahmad to tell Sarah. Hi. What is accounting for your opinion? From your opinion. What do you understand? Yeah? Not really. Ahmad, can you please help Sarah? What is accounting that you understand in your opinion? Uh-huh. Yeah. Yeah, that's right, Ahmad. Okay, Sarah, can you hear Ahmad? Okay. So Ahmad said it is about calculating the revenue. Okay, that is the first thing. Okay, in a means that in a formula. Okay, we have the formula and format for doing our accounting. Okay, so hello Arfat, welcome. Arfat, can you hear me? Arfat is your friend, Ahmed. You know, you okay? You know, okay, very good. So because of doing recording and in the same time I'm opening my camera, so my system is going to something wrong somewhere. I don't know why. Maybe my system is loading. System is very heavy. So can I yeah, lagging kan? So I want to turn off my camera. Is it okay for all of you? Okay, thank you so much. Okay. So Arfat, I hope that you are there and you can hear me. Okay. All right, very good. Okay, so let's continue with chapter 3. Okay, Arfat, for chapter 1 and chapter 2, the recording is already given to in the WhatsApp group. Okay, Arfat, you can look back after this. Okay, Arfat? Okay, so let's continue with chapter number 3. Okay, it's about accounting equation. Okay, before we are going to know how you uh, how you want to do regarding the accounting, what is the technique, okay, what is the format, okay, before that you should know the accounting equation. Okay, this is very very important for you to understand. Okay, and also accounting classification. Okay, so what is the terms that you need to know before you do the format of accounting itself. Okay, so let's look one by one about the accounting equation and accounting classification. Okay, for the learning outcomes, okay, what you are going to learn for this chapter, okay, especially for chapter number 3, okay, you must able to identify the component of financial statement, okay. If you look back at my recording for the first and second chapter, okay, financial statement is about the format that you need to do, okay, in order for you to prepare for financial statement, okay. Ahmed, did you remember what is the type of financial statements that I taught you before? Okay, types of financial statement. Did you remember? We we have two types of financial statement. Did you remember or not? No. Okay, never mind. Okay, so we will look at that, and then the learning outcome for number 2 is able to you uh, must learn about related between business transactions. Okay, what is the business transaction with the accounting equation? All right. So what is the financial statement? Okay. So here I will tell you what is the financial statement. Okay. It is a structured report of a business financial activities. Okay. For example, if you are doing the business, okay, uh, if you open up the shop, for example, you are uh, shop like what we call it as runcit, perniagaan runcit. Apa kita panggil trading. Okay, if you uh, sell, for example, vegetables, okay, fish, chicken, okay. So that is the business activities. Okay, so in financial statement, we will conduct or prepare the structured reports that we call it as the financial statements. Okay, so when we need to prepare, okay, we need to prepare the financial statement. Okay, whether okay monthly, okay, once in a month, okay, quarterly, okay, half yearly or yearly, okay, once a year or maybe a quarterly, okay. So what is the financial statement purpose? Because, okay, why we should do the financial statement is to provide the overall picture of a business health, okay, and wealth, okay. We need to know whether our business is having a profit or not, having a revenue or not. And then we can have a of overall pictures of about our wealth, okay, business wealth, okay, whether our business is having a lot of money, okay, in terms of asset, or whether our business is uh, having a lot of liability. Liability means that we owe to others. Okay, hutang. Okay, Sarah? Liability, we call it as hutang in Malay. Alright? So, so what is the financial statement? Okay, so before for the chapter 1 and chapter 2, I already discussed with Ahmed. Okay, the two types of financial statement that you need to prepare. Okay, so the first one, okay, is for diploma, okay, for diploma student, okay, you need to prepare statement of financial position. Number one, we call it as statement of financial position. Okay, and then number two we will do statement of profit and loss, or other terms that we can call it as a statement of comprehensive income. Okay, that is two types of financial statement. I repeat again, two types of financial statement that you need to understand and you need to prepare. Okay, at the end of the semester, okay, accounting acd 101, you should know after completed all the classes and all the tests. Okay, you need to know how to prepare for these two financial statements. Okay, the first one we call it as statement of financial position, SOFP. Okay, the short form is SOFP. And another one is statement of comprehensive income, or we call it as statement of profit and loss. Okay, the short one is SOPL. Okay, just two of it you need to prepare. Okay, the rest is no need to do. Okay, because for the rest is just for the degree students. Okay, so you need to know how to prepare SOPL and SOFP. So that is the first thing that you need to know. Okay, after that you will we will discuss regarding what is the format. Okay, what is the format for preparing these two financial statements. Okay, so if you look at the examples, okay, outside there, you can google. Okay, you can google and then you type examples of financial statements. Okay, so it will uh, okay, the result will many examples that you can look outside there. Okay, other than that, okay, you will look at the annual report for all the company outside there. Okay, so for example, in Malaysia we have Genting Plantation. Genting Plantation is one of the company, okay, big company in Malaysia. So if you look at the annual report, okay, in this annual report, it including the financial statement, that is SOPL and SOFP, that you need to know how to prepare. Okay, students, you need to prepare for the financial statement. So before you know what is the format, you need to know the classification first. You need to know the equation first. So that's why chapter 3 will highlight that. Okay? If you are not having the knowledge and then you are not understand regarding the equation of accounting, or the classification of accounting, you cannot prepare by yourself. Okay, without the understanding, you cannot prepare by yourself. Okay, believe me. Okay, this is very, very important topics. Okay, so usually, okay, financial statement is doing by the big company. Okay, for example, if there is our students that work hotel in Langkawi, right? So if the hotel is a big company, so they also have their own annual report. Okay, so because most of the company outside there, even though in Malaysia or even though in Singapore or in India, so they need to have the proper annual report. So for every company, okay, big company, and then under the annual report, okay, so annual report must be submitted to all public, so everyone will can access the report. Okay, under the annual report, so there is including the financial statement. Okay, the two things, that is SOPL, statement of financial position, and another one is statement of profit and loss. So this is just an example. Okay, so if you want to search by yourself in Google, so you can search the annual report. So you can uh, identify which of the company that you think is very a big company. You need to know about their annual report, you can just Google. Okay, type in the Google search. Okay, so it will come up with the annual report. So under the annual report, so you will find out the financial statement. Okay, SOPL and SOFP. So, so let's look one by one. Okay, the first one, we will look at statement of financial position. Okay, so why is it the title is statement of financial position? What is financial? Okay, what is position? Okay, the condition of your finance. Okay, condition of finance of your business. Okay, so bear in your mind. Okay, so mostly, okay, outside there, okay, the company that create or prepare the financial statement is company, a big company. Okay, usually, okay, because they have the rules. Okay, every country they have the rules. If you are a big company, okay, or the corporation, we call it as corporation, so you need to follow the rule to prepare for financial statement. Okay, so the first one is statement of financial position. Okay, so what is statement of financial position? It shows the financial position of a business at a particular point of time. Okay, so we just prepare for the financial statement on with the point of time only. Okay, not every day. Okay, maybe because every day we just record all the transaction, business transaction. What is the business transaction? Okay, if you go if you look at a mall, for example, you doing shopping, okay, at a shopping complex at a mall, okay, you can look at the customer go into the shop and buy some goods, okay, go to the restaurant and eat some food or drink. Okay, that is the example of business transaction. Okay, so we just, okay, in the financial position, it only show the details of the point of time. We call it as the accounting period. Okay, accounting period. You should record the business transaction. Okay, for the regarding accounting period. Accounting period. Okay, I hope that you will revise back on the chapter 1 and 2 because it's very important to know what is the accounting period. Okay, accounting period is a limit of time. Okay, whether from the 1st January until 31st December on that year, for example. That is the point of time, or we call it as the accounting period. From when until when you should record your business transaction in order for you to put inside the statement of financial position. Okay, I hope that you will understand the terms that I use, okay, in accounting. For example, accounting period, for example, what we call it as business transaction. Okay, so I've already mentioned the example of the business transaction. Okay, for example, the customer uh, buy 2 pieces of watches. Okay, for example, like that. That is the business transaction example. Okay, so what is the activities that are usually conducted, okay, in a business? Okay, so you must bear in your mind, okay, you must have a pictures of you are doing a business. Okay, if you are taking accounting ACD 101, you should have a pictures in your mind, okay, you are doing some business, okay, any kind of business, okay. For example, you want to open a restaurant. For example, you want to open a cafe, okay. If you want to open a mobile phone shop, okay. If you want to open a clothes business, okay, never mind. Just bear in your mind you have pictures of doing the business, okay. As you are a boss or the owner of the business, okay, the owner should prepare for financial statement. So that's why you learn accounting, because you need to know how to prepare for the financial statement for your business, okay. Okay, so let's look more further on the financial position itself, okay. So in the financial position, later on we will look at the format, okay. Do not worry very much, okay, if you don't understand about accounting. So a little bit I will discuss with you, okay. Financial position means disclosing or showing the total amount, okay. In the financial position, okay, it will show the total amount, okay, of assets. Okay, so you already know, okay, what is asset? Okay, you already know the term asset that are owned by the business. Okay, owned by the business. Okay, you already know the asset is owned by the business, means that owned by the owner itself, and the amount of contribution. Okay, we will look at in the financial position. It also shows the amount of contribution from the owner. So it will call the term as capital. Okay, you already know the two things. The first one is asset. The second one is capital. So can we repeat back? What is the exact definition of asset? Okay, and for the first thing, so you should know what is that means by asset. What is that? Okay, so asset is the amount that owned by the business. That is the definition. Another one, what is it? What is capital? Okay, capital is the amount of contribution from the owner. Okay, for example, if you want to open up the business, you need to have money, right? So where did you get the money? Okay, maybe because maybe from your bank account, saving account, or maybe you get from the gift from your grandfather, for example. Okay, that we call it as capital. Okay, so number 3, what is the big classification that have in the financial position? Number 3 is okay, borrowings. Okay, so you look here, borrowing. Okay, or we call it as liabilities. Okay, for example, if you want to open up the business, you need to have more funding. You need to have more money. So you already you are in account in the bank account, your money is already gone, okay, for example. So you need another sources of financial, okay. So what you want? Yes. Okay. Yeah, betul. Yes, that's right. Yeah, that is right. Yeah, we call it as liabilities or borrowings, okay. Correct. Okay, for example, if you make a loan from bank, okay, personal loan or for your business loan, okay, It is that is a liabilities. Okay, the term in accounting we call it as liabilities. Okay, so you already know the three terms. Okay, the big terms. Okay, in the financial position. So you must remember. Okay, not only three. Okay, the classification is only three. But then under asset, capital and liabilities, there is some of the subcategories under that classification. So let's look at the example of the format for statement of financial position. So if you look at the slide there, okay, we have three types elements of SOP that we already discussed before. Okay, the first one is asset, second is liabilities, the third one is owner's equity. Okay, other name for capital we also call it as owner's equity. Okay, what is the amount of owner's equity? All right, so for the business, okay, how much is the owner's equity? Means that add on with the capital that the owner contribute plus with the profit. Okay, that we call it as the owner's equity. Capital is the contribution, okay, money or amount of money that contribute by the owner. Okay, so owner's equity is when capital amount we add on with profit. Okay, so that we call it as owner's equity. Okay, if you can see at the format here, okay, the format for statement of financial position. Okay, so how will they look at the format? Okay, for the first one you should write the name of the business. Okay, so can you see my slide clearly? Are you clear with it? Okay, so for the first paragraph here, the first line here, the title is about the name of the business, Super Supreme, for example. And then the second line is the title for the statement itself. Okay, so now we are going to look at the statement of financial position format. So that's why the title here for the second line is the statement of financial position as at 31st December. So this and then it will come with the title of the date itself. Okay, so that's why, okay, I have already mentioned before this. Okay, so uh prepare, okay, SOFP is prepared on a regular basis. Okay, monthly, quarterly, half yearly or yearly. So that's why for the title, so we should put the accounting period. Okay, accounting period at a particular point of time. Okay, from when to when. Okay, that is the accounting period statement of financial position as at December 2013. Okay, for example, your timeline of your this semester is from September until December, right? Okay, that is the timeline, okay, of your semester. So same goes to statement of financial position. So they also have a timeline. Okay, so start from the 1st January 2013 until 21st December 2013. So usually for the financial statement, we will just prepare at the end of the accounting period. Okay, at the end of accounting period, we should prepare for the SOFP. Okay, so from the 1st January, we just collect all the data, record all the data into the specific accounting, specific book of account. So later on, we also can, yes? Ah, okay. In Malaysia, usually the timeline is from January to December every year. Yeah, March to March. Okay, never mind. Okay, most of the company in Malaysia, we just follow this January until December. Okay, so there is also the company that choose June to June. Okay, June 2021 until June 2022. Okay, it's all based on your company preference, your company preference. Okay, that is accounting period. Okay, so let's look what is the okay. If you look here, the table, we have three columns. Okay, first column is about the details. Second column is RM because we are in Malaysia, so we just use the currency of Ringgit Malaysia. Okay, RM and RM. Okay, if you're in a company, you are opening company in India. Okay, you should use this R R what rupees? RP, right? RP. Yeah, RP rupees. Okay. So, if you look at the details here, okay, you have non-current asset. Okay, so that's why I already mentioned to you, asset is the biggest classification. Okay, so they have a sub-classification for asset. We have non-current asset, current asset. Okay, means that asset we have two types. Okay, first is non-current, second is current. So what is the example of non-current asset? Later on we will look at this classification one by one. Okay, we just go through the format here. Okay, we have current asset and then finance by. Okay, so you must add on all these things. Okay, non-current asset 230, and then you have the current asset, inventory, bank. Okay, this is all the example of the current asset. Okay, in the business, inventories. Okay, the stock. Okay, the stock that your business sold to the customer, that is inventories. Bank. Okay, the amount of money inside the bank of business account. And then account receivable, later on we will look at what is the example of account receivable. And then there is also prepaid expenses. All the current asset you should add on. Okay, add on, so you will get 86,450. Then add on with 230,000, you get 316,450 is the total assets. Okay, total asset. Okay, so that and then after that we should identify the finance by, means that the amount of contribution of the company, of the owner itself. We call it as owner's equity. So we have capital. Capital apa? What is capital? Is the amount of money that contribute by the owner to the business. Okay, and then add on with the net profit. Net profit means that your revenue from the business activities, you must add on. So last with the drawings. Drawings, what is it? Drawing is amount that you the owner owed to the business. Okay, you should less. Okay, minus with the owner's equity there. So you will get 149,940 is for owner's equity. Okay, so never mind if you don't understand. Okay, I want to give you some pictures of the financial statement format. Okay, SOFT format. Okay, Later on, we will go detail about what is the terms. Okay, you need to know the terms itself. Okay, definition of the term itself. Okay, so non-current liabilities we have loan from bank. Okay, term loan means that loan from bank in a long-term period. Okay, and then liabilities we have also current liabilities. Okay, for example, is account payable and accrued expenses. Okay, later on, if you look at SOFP, so the amount of total asset should be equal with the amount of owner's equity you plus with liabilities. Okay, this is uh, the equation of the accounting. You need to know, okay, class, asset, okay, in SOFP, when amount of total asset, you add on with the amount of owner's equity plus with liability. Amount as asset, total asset should be equal amount of total asset in your statement of financial position that you already prepared should be equal with the amount of owner's equity plus with liability. Okay, this is the uh, equation. Okay, accounting, the most call it as the most important accounting equation. Okay, so in the format there, okay, you need to determine the amount of asset. 316450 is the total asset, right? Okay, after we add on the current and non-current, so you get the total asset is 316450 should be equal with what? Amount of owner's equity you add on with all the liabilities. Non-current and current is amount of liability. So amount of liability is uh 166,500 add on with 159950. So the answer will be 316450 is equal to amount of total asset here 316450. So that it means by the equation here, okay, where amount of A is asset should be equal, is the same, okay, should be equal or the same with amount of OE is stand for honest equity. Okay, and L plus means that add on with liability. So that is the accounting equation that you need to know, okay, in the first place. Okay, so you will find out the first equation in the statement of financial position. Okay, please don't ask me why, madam. Why asset should be equal to owner's equity plus liability. Okay, no need to elaborate more because accounting is just a technique. Okay, technique means that you just follow. Okay, follow the system only. Okay, we can do anything. Okay, we cannot do anything except follow the rules or the tactics that all over the world, the people all over the world use this. Okay, so in a statement of financial position, you should know, okay, the asset amount should be equal, same with the amount of owner's equity plus liability. Okay, class, can you understand what I mean in SOFP? How come? Okay, macam mana boleh dapat tiba-tiba dia punya how you will find out the equations. So because of that is the rules of the accounting you need to follow. Okay, accounting is not like a science. Okay, science science stream, okay, is where you do thing and then you need to have the facts. Okay, you need to know the facts first. Okay, the facts. But here accounting is just a social science or art. Okay, so the things that we can adjust, okay, and then the technique we can adjust, okay, to follow the rules. Okay, so the rules for accounting for the first equation that you need to know is the equation of asset is equal to owner's equity plus liability. Okay, so I want to ask all of you, okay, the three of you, is there an equation that you need to ask me, okay, that you not understand about? Sarah, can you understand about financial statement of financial position? Sarah, Sarah, is it okay? Hello, where are you, Sarah? Are you there? We can't reach Sarah. Where are you going, Sarah? How about Arfat? Arfat, can you understand? Okay. Can I ask you some question, Arfat? Okay. So, what is your understanding about accounting equation? A is equal to OE plus liability. When you will found this accounting equation, Arfat? Okay, Arfat, what is your opinion? By doing all the. Okay, very good. Total of asset means that non-current asset we should, yes, plus with current asset, that is total asset. A is equal, the amount should be equal to owner's equity, okay, and owner's equity 1499550, okay, plus with current and non-current liability 166 to 100, plus with 66 500. So with add on with the owner's equity 149950. So it will uh, the same with the total asset, that is 316450. Okay. I hope Ahmed also can understand. Ahmed, did you have any questions you want to ask? Okay, very good. So if you, I can't reach the Sarah. Where's Sarah? I want to know whether she understand or not about this equity and also the example of statement of financial position for that. Sarah, are you there? Where are you? Okay, never mind. Just go through. Okay, next is about Sarah, can you understand? It's you, not Sarah. Okay, sorry. Okay, you want to ask? Repeat again. I can't understand. Okay. Automation. You mean the format? The format. Okay. Yeah, yeah, yeah. Yes. Yeah, yeah. Ahmed, there is yeah, there is software. There is software that is very that we use especially in corporation. Okay, the software is very a little bit pricey, so it's so there will be used by the corporation. Okay, in the software itself, the system itself, you just need to enter the amount, and then automatic, okay, the financial statement will go there. Okay, so we can produce the financial statement. So but because of for education, so we should do one by one using human okay, calculation. Okay, so by uh, okay, so Sarah, can you understand? If you don't, faham tak apa yang saya terangkan tadi? Faham Okay, boleh Asset tu apa, Sarah? Ha, ha. Once again, Ahmad, you ask me a question. Yes, yes, that's right. Okay, accounting can be manipulated by the accountant itself. Okay, if the accountant is doing their job, okay, with the conflict of interest, means that uh, the boss itself asks the accountant to manipulate the revenue, for example. So that is uh, the statement that they provide is uh, misleading. Okay, misleading information. Okay. So that's why the accountant should have we call it as ethical conduct. You should conduct ethical act. Okay. Okay, asset or resources or okay, betul lah tu Sarah. Resources or item of once again. Yeah, that's right, Ahmad. So that's why most of the company outside there that is bankruptcy because of the manipulation of the accounting information. Okay, the manipulation by the misleading. Okay, not relevant accounting information. So that's why most of the company, for example, Enron cases, okay, so you can search in the Google, okay, type the misleading of the accounting information. So you will find out many of the big corporations outside there is bankrupt uh, because of the manipulation of the accounting information. Okay. Okay, so let's move to other slides. Okay, so we will look more further on the elements of financial statements. Okay, so we should details about the five elements. Okay, salah. Okay, the classification. Okay, So the classification inside the SOFP. Okay, so please remember we have two types of statement. The first one is statement of financial position, and another one is statement of profit and loss. So we look at the SOFP first. Okay, the first classification. Okay, the first terms inside the SOFP that you should know is assets. Okay, assets. So, and asset are resources. Okay, or items of value that the business owns and expected to generate economic benefits in the future. For example, if you buy a telephone uh, for your own, okay, and then that is the asset for you, okay. Other than that, as you're a student, so your asset is laptop, for example. So by buying the laptop, you will use the laptop to do your assignment, to do your test, for example. Okay, that is asset. Okay, we expect that the asset will give the economic benefit in the future. So that is the definition. Okay, detailed definition about the asset itself. Okay. So for example, okay, other than that, okay, if you already pernah tak makan, if you already consume ice cream, okay. In this example, they use ice cream gula apung. Okay, in Malaysia, it's very popular. Okay, so how you want to produce the ice cream? Okay, by using the ice cream machine. Okay, so by having the ice cream machine is our asset. Okay, the business asset. So by having the ice cream machine, so the company or the business can produce ice cream and then can sold the ice cream to the customer and then get the money from the ice cream. Okay, that is means by the asset. So machine, ice cream machine is the asset. Okay, what about now? If you buy, uh is that the liability? What does that mean? Okay, is it and yes, it's the asset. No, no, ice cream is inventory or stock, or we call it as the goods that we can sold. Yes, if you have the asset or you keep the asset in the store, keep the goods in the store, so we call it as inventory. Inventory is a current asset. Okay, so you must differentiate between. After this, I will explain to you the different. No, for the honor. Yeah, yeah, for the honor. Okay, not for. Maybe yes. No, no. Maybe when the customer buy the ice cream, and then you will get the ice cream, right? So ice cream is an expenses for the customer. Expenses. Okay. That item, that classification we will discuss later. Okay, Ahmad? Okay. So, as I mentioned before, asset we have two types of asset. Okay. So the first one is non-current. Okay, or fixed asset. Okay. What is mean by non-current is kept and used on long-term basis, more than 12 months. Okay. So the machine. Okay. The what is it? Van. Okay. The vehicles. Okay, furniture and fitting, that is the non-current asset, means that we can use that asset in the long term. Okay. So besides that, okay, for non-current asset, we also have three classification. Okay, the first one is tangible, intangible, and long-term investment. Okay, for the first one, tangible means that the asset that we can that have a physical substance that we can touch. Okay, the asset. For example, land, building, plant and machinery, fixtures and fitting, equipment and motor vehicles. That is the first one. Okay, the second one is intangible. It also non-current asset, but we cannot touch it. Okay, there is no physical existence for that asset. We call it as intangible. For example, is goodwill, franchise, patents, trademarks, and copyrights. Okay, patents. Okay, if you what is it? Patents, trademark, copyright. Okay, that is the intangible asset where before you are producing some of the product, okay, for the good or goods. Okay, that is different from others. For example, if you create a car or a telephone, that is different from other company. Okay, so then you can claim for the patents. You can we call it as register or fill in the form to patent your or trademark your product. Okay, so that is also intangible asset to your company. Okay, for example, if you look at the cartoons, Disney. Okay, you have the logo. We have Disney and R here. Okay, that is some of the copyright examples. Okay, for example, you buy some Nike shoes. Okay, Nike also have R there. That is a patent copyright. Means that nobody will use the same name, logo, and logo of the company. So we call it as a patent, trademark, and copyright. Okay. If you have that, it also will increase your non-current asset of the company. Okay. Huh? But actually, if you yes, you said, but actually we classify the asset vehicles is non-current asset. But if you look at the real situation, okay, if you buy the car or you buy other vehicles using loan or hire purchase, okay, it is a liability for us, actually, not an asset. Okay, because we must uh buy for we must apa, pay the monthly and then pay all the interest, all the maintenance, repair and maintenance, and all of the things. It just a liability for me. Okay, so but in terms of accounting, okay, as rep vehicle, even though you are hire purchasing the vehicles, that is asset for company. Okay, non-current asset. Okay, that is the motor vehicle. Okay, the classification of motor vehicles is under non-current asset, not liability. Okay. Okay, other than that, we have also long-term investment. Okay, long-term investment is also non-current asset. For example, you buy the fixed, you have a fixed deposit in some of the account in the bank or ASP. Okay, in terms of portfolio that you invest in the bank, so we also call it as a long-term investment. That is also non-current asset of the company. Okay. Why once again the interest in plus. Okay, okay. Okay. Mhm. Hmm. Okay. Okay. Yeah, yeah. Yeah, actually, if you look at the loan itself, okay, liabilities, okay, in Malaysia especially, okay, the we call it as the interest, okay, because of the inflation, the interest is increasing, okay. The bank must increase the, we call it as overnight rate, OPR, overnight, if I'm not mistaken, OPR, because of the inflation itself. Okay, so it will become a liability for us because we need to pay for the interest itself. The interest is become higher than before. Okay, so that is the liability for us. Okay, but here, uh, long-term investment is not a liability actually. Okay, long-term investment means that you invest in some of the portfolio and then you get the invest interest, okay, interest earning, not interest paid, okay, and also you will get the dividend from the saving, okay. Dividend is one of the income you receive, okay, the revenue that you receive. So that's why long-term investment is under non-current asset, okay. Whatever you have, okay, the owner of the business have, that is our asset, okay. So if you look at the second types of asset is current. Okay, current asset means that the asset that can is very liquid, that we can change or convert that cash into that amount asset into the cash in a short term. Okay, that is means by current asset. If you look at the non-current asset, we can use the non-current asset at least 1 year and above. But for current asset, we just use the asset, okay, in a short term, and then that asset we will contribute in a short term to the cash itself, okay. Normally can be converted into the cash less than 12 months. For example, as I mentioned before, the stock itself, the inventories, okay, if you produce some of the product, for example the clothes, okay, you, and then the clothes you must uh, put in the store, that is, we call it as the stock. And then what is it, what other of the example of the current asset is account receivable class, okay. Other terms you also can use debtors, but I prefer for you to use account receivable, okay. account RECEIVABLE, account receivable. Okay, after this, okay, you must familiar with the terms, because after this we will look at how the transaction, this business transaction affect our accounting classification in terms of asset, in terms of liability, and all of the things in the accounting. Okay, so you should remember the terms and know the classification. Okay. So please remember we have, yes, hello, I can hear you. Once again, Ahmad. Oh, oh, interest rate is not halal. You mean right? Okay, so if you look at as a Muslim, okay, you should find out the investment, or you should find out the bank, okay, that offer you portfolio or offer you a loan that have in using the Islamic portfolio. Okay, you should choose that. Okay, in Malaysia, especially we have option, or we have many options. For example, bank. Okay, we can choose which bank that offer Islamic, we call it a Islamic system. Okay, if you want to make a loan, if you want to uh, invest some of your money inside that bank, so we can choose which one is Islamic, using the Islamic banking system. Okay, so by having, okay, so in Malaysia especially, using the Islamic banking system, we have a Sharia, we call it a Sharia uh, board. Okay, we have a Sharia board committee members. Okay, that can, yes, yes, Sharia compliance bank. Okay, they have their board member that can meeting. Okay, and then they will always look into which one is the investment that they're not, which one is halal and which one is haram. Okay, Ahmad. Maybank, maybe they have some of both. They have both. First, they have conventional, and then they have Islamic banking. So mostly in Malaysia, most of the famous bank, they have their own they have their own panel for Islamic and also Islamic financing, and also non-Islamic. Okay, Ahmad, they have both. All right, so you should have, you should know by consult with their members of the bank. Okay. All right, so let's continue. So you should remember we have two types of current asset. First is non-current, especially for example, fixtures and fitting, vehicles, machinery. Another type is current asset, that is inventory, stock, account receivable, cash, amount money in cash, and also amount money in bank. Okay, so can you remember this? Non-current and current asset. It's very important for you to understand and also remember. Okay, so because after this we will look at the transaction, business transaction, that will give effect to our this kind of classification. Okay, so next let's look at the liabilities. Okay, what is liabilities? Okay, amount that owner owing to the borrowers. Okay, amount that owing to the bank, okay, to the person, okay, to the supplier. Okay, in a business we have supplier, we have bank institution, financial institution. Okay, so maybe the owner borrow the money from these parties. Okay, so we call it as liabilities. Okay, so this is example. Okay, so in Malaysia we have PTPTN. Okay, for the students apply for further their studies. Okay, using loan, make a loan from PTPTN. Also Bank Islam is one of the example of this bank that uh, use the Islamic system, banking system. Okay, so same goes to asset. Liability also have uh, two types of liability. Okay, so this is the, yes. No, not all, but actually no. If using this Islamic, we can have we will have the interest that is halal. Okay, based on the not more than, if I'm not mistaken, not more than it will be is supposed to be. Ah, so it will be halal. Yeah, yeah. Okay. No. Because okay, before this, yes, before this, before the Islamic banking system is not very popular in Malaysia. Okay, PTPTN is using the conventional system, banking system. So nowadays, okay, I also a PTPTN borrower. So where they have already converted. Okay, if you are a Muslim, you can choose whether to convert uh, the scheme or the model of your borrowing into the Islamic finance banking. What we call it as, I can't remember the terms in the Islamic terms that used by the PTPTN. Okay, if you want to know further, Ahmad, you can search in the Google. I can't remember what is that terms. Okay, so uh, all the borrowers, okay, will be notified by the PTPTN provider. Okay, if I choose, okay, I already click the means that the application form, okay, to change to iShariah, if I'm not mistaken. Okay? So we can have an option to do it. Okay. Uh, is it okay, Ahmad? Okay. So liability, what does that mean? The obligation, and then uh, the parties, external parties, claim to the business assets and amounts owed by the business to outside parties. Okay. So liabilities we have two types. That is the first non-current liabilities. Second is current liabilities. Non-current liabilities is the debts that we need to repay more than a year. For example, 9 year, 7 years. Okay. For example, long-term loan, mortgage, and debentures. That is types of non-current assets. Okay, for current liability, okay, that which are repayable within the year. We should pay the debt, okay, not more than 1 year. Okay, for example, amount owed to suppliers of goods, we call it as account payable. Okay, for asset, non current asset, we have account receivable. Okay, means that the outside parties is owing to owner. Okay, that is account receivable. Okay, but for liabilities, we have current liabilities, we call it as account payable, where the owner, okay, owing to the uh, owing to the creditors, owing to the supplier. Okay, that we call it as the account payable. Or other than that is a bank overdraft or short-term loans. Okay, that is example of current liabilities. Okay, you need to understand all these terms. Okay, so that it will easier for you to do the exercise of the business transaction later. Okay, so please remember. Okay, account payable, the terms of account payable, and then for the current asset, the terms of account receivable. Okay, there is a different things there. Okay, account payable, yes, yes, Sarah. Yes. Uh-huh. Mhm. Okay. So kalau non-current maknanya you buat loan, okay, owner of the business, dia berhutang kepada, dia buat hutang dekat bank tu lebih daripada setahun. Maksudnya jangka masa panjang untuk dia owner tu bayar. Okay, contoh kalau kita beli apa, kita buat loan untuk rumah kan, ataupun building, berapa tahun kena habiskan masa, dalam 20 tahun kan, tu tak lama kan. So itu adalah non current liabilities. Okay, nak bayar tu kita kena ambil masa yang lama sangat nak bayar. Kalau current liability ni kena bayar dalam masa yang singkat. 2 bulan, 3 bulan. Kebiasaannya kita berhutang kepada siapa? Account payable ataupun suppliers. Supplier tu yang bagi barang untuk kita jual barang tersebut. So supplier tu adalah orang luar yang bagi barang kepada perniagaan kita. So kita panggil dia sebagai account payable kalau owner tu ada berhutang pada dia. Okay, kalau you perasan you pergi dekat kedai runcit kan. Kedai runcit tu mesti akan ada lori datang kan. Lori bawa barang, lori bawa roti, lori bawa ayam. Okay, kebiasaannya mereka owner tak akan terus bayar duit pada orang yang beli, orang yang supply barang ni. Dia akan berhutang dalam masa 2 bulan ataupun 3 bulan. Yang itulah kita panggil dia sebagai current liability. Okay, Sarah? Okay. Is it okay, Sarah? Alright, okay, so let's continue. Okay, so enough for the liability aspect. So now let's move to honest equity. So what is honest equity? Okay. So honest equity, it means that honest claim, okay, on the business asset. So honest money, okay. What is the amount of honest asset in the business? Okay, how much is the honest asset for the business? Okay, that it means by the honest equity. Okay, so in the honest equity, okay, if you look, okay, at the equation here, okay, the black bowl here, owner's equity is equal to capital, okay, plus profit minus drawing. Okay, so this is the technique, or this is the what we call it as equation, okay, that you need to know in order to get the amount of honest equity. Okay, you need to have capital first. Capital, okay, that is the contribute by the owner. For example, you contribute to the business, okay, you have 100,000 ringgit, 100,000 in your bank account. So you where did you get 100,000? You get because you get the price from the bank, for example. Okay, so in your bank account you have 100,000 ringgit. So you think you want to have a business, okay? So you want to open up the business by using 100,000 ringgit, the price, okay? So that is your money. Honest equity is equal to capital. So that is your capital, 100,000. And then after you are doing some of the business transaction, or you already operate activities of the business, so you get the profit. Okay, so the profit is come from, later on we will look at SOPL. Okay, another one, financial statement. Okay, later on we will look at that SOPL. So whereby we will determine the profit from the SOPL. So this profit you should add on with your own capital, right? Before this you have 100,000 capital, right? Okay, you contribute to the business. Yes. Okay. Statement of 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 profit and loss. Okay, so capital is 100,000, and then you plus with whether you from the SOPL you get the profit, for example 40,000. So capital plus accumulated profit is 140. Okay, and then if you are having drawing are the cash or goods taken by the owner for personal use. Personal. So if you're, even though you are the owner of the business, okay, so you should uh, segregate, or you should differentiate between, okay, the uses of your business, okay, the money for your business, okay, with the use of the money for your personal, okay. So if you look at the chapter 1 and chapter 2, okay, I've already mentioned to you, in accounting there is a concept, means that the separate legal entity concept. You should follow that concept in order for you to do in accounting. Okay, you should follow the concept where separate legal entity ataupun business economic entity. It means that you, as an owner, you should differentiate between the activities of business purpose and also the activity of the personal purpose, personal use. Okay? Yes, I know you are the owner of the business. All the money inside the business is yours. But then you, in terms of uh, the activity or the money that you use, you should differentiate between the business use and also the money for personal use. Okay? So if you owner, okay, took the business money for your personal, okay, that we call it as drawing. Okay, that we call it as a drawing. So, for example, you have apa tu, kedai runcit bahasa Inggeris apa, lupa dah. A shop, okay, that use convenience goods. Okay, for example, flour, for example, fish, chicken. Okay, what else? The rice. Okay, so suddenly your family, for example your auntie, need to have the chicken from your shop. Okay, so if your auntie asks you to can you give me this chicken for free, free of charge, can or not? Okay, yes, you can give to your auntie, but then you must minus, okay, the amount of chicken, for example 10 ringgit. Okay, you must minus the drawings from your capital plus accumulated profit. So because of we are following the concept of business legal entity, or we call it as a separate legal entity. Okay, the money for your business is different with the personal use. Okay, can you understand what I'm talking about? That is drawings. Okay, the owner took cash or goods taken by the owner for the personal use. So that's why to calculate for owner's equity amount, you should minus with drawing. Okay, drawing is the amount, okay, that you get from the business for personal use. Okay, other than that, okay, you are the owner of the business. Okay, and another example for drawings. Okay, you have a business so that sell watch. Okay, branded watches. Okay, so one day your cousin uh are going to your cousin, you need to get the watches to give to your cousin, as a present, wedding present. Okay, so you take the goods or you take the watch from your shop. Okay, and then the shop give the watch to your cousin as as a wedding gift. So as a wedding gift, that is for personal use. So maybe the branded watches amount to 15,000 ringgit. Ah, so branded watches, okay? So it's very pricey, okay? So you take one of the watch from your shop, okay, and then give to your cousin as a wedding gift. So what you need to do when you calculate for the owner's equity amount, okay, capital 100,000 you must plus with the profit, for example 40,000, and then you must less with 15,000. So 100,000 plus with 40,000 and then minus with 15,000 drawings, okay, that you use the inventory for the personal use. So what is your honest equity amount? Can you please calculate for me? How much is your honest equity? You have the capital 100,000 and then you plus with the accumulated profit, that is 40,000, and then you must minus with 15,000. 20, 125. Okay, so is that true? Wait, I calculate first. No, plus with 40,000. Okay, minus with 15,000. So 125,000. That is your amount of honest equity. Yes. You must minus your drawing. Okay, so drawing apa-apa what else that you take the cash or goods from the business for personal use. Please remember this. Drawing means that take off the cash or goods for personal use. That is drawings. You must minus when you are calculating for honest equity inside SOFP. Okay. It's very tiring. Okay. Yes. Yeah. 100,000 ringgit. Okay. 100,000 100,000 plus add on 40,000. And then you minus 15 15 Okay, you got it? 125. Okay, okay, very good. Okay, so okay, you want to take a break for 10 minutes? Okay, let's have a break about 10 minutes. Okay, we will start 11 to 10 a.m. All right. Okay.
dia call saya bagi tahu yang sekarang ni tengah kecoh dekat rumah Fayaz pasal dia dengan Fayaz. Kecoh? Kecoh apa? Tak tahu. Mungkin dia orang tengah gaduh. Ha? Ya, aku tak ada niat pun nak bunuh bapak kau. Ya, aku niat nak pukul dia je. Dia memang nak jatuhkan aku seperti mana dia jatuhkan arwah bapak aku. Okay, that's why I hate him so much. Tapi aku tak ada niat pun. Dia didn't expect that to happen. Orang-orang aku yang buat silap. Okay? Boleh silap. Silap ke tak buat silap? Kau apa balik lah? Aku akan pastikan. Orang yang bunuh bapak aku juga dapat balasan. So, kau nak buat apa sekarang? Aku nak pergi balik buat report. Aku tak cakap boleh tadi. Kau nak buat report, buatlah. Aku minta maaf. Semua ni berlaku. Okay? Tapi ingat, kalau kau masuk balai itu, engkau akan hancur semuanya. Termasuk diri kau dan juga semua ahli pembunuh. Senang kau cakap kan? Yang terbunuh tu bapak aku, bukan bapak kau lah. Aku dah cakap kan, aku tak sengaja. Nak apa lagi? Kau lupa ke yang kau pun pernah nak bunuh aku? Din, kalau abang nak bunuh dia, dah lama lah dia buat. Disebabkan kita ni, abang berubah. Tak ada manusia yang tak lari dengan kesilapan ni. Termasuk Abang Fayan. Habis dia nak buat apa? Biarkan je orang yang dah bunuh Papa ni macam tu. Apa yang abang tanggung sekarang ni? Tadi teruk ni. Dia tengoklah kaca. Itu sebab tak. Tadi saja siasat apa. Yang mana tak ada. Kau jangan sibuk buat dia. Cakap dia tak ada kat sini.
Alright, class, shall we continue? Are you there? Alright, okay, so kita mulakan lagi sikit lah. Okay, so after you already know about how to calculate for the honors equity, okay, please remember this because here in this the formula in SOFP you should calculate for the honors equity. Okay. Okay, in here, okay, financed by honors equity. So you should put the capital plus with net profit and then less with drawings. Okay, just remember the terms drawings. Okay, if you look at the question, they ask they said about the first the owner took goods or cash for personal use. Okay, so means that the personal use is the drawing itself. Okay, so that let's continue for okay. So we finish about SOFP. Okay, please remember. Okay, elements or the character, the classification that you find out in the SOFP. Okay, so asset, liability, and also owner's equity. So you already know what is that means of asset. Okay, you already know the classification of asset. We have two types of asset: non-current asset and current asset. Okay, so you also know the liabilities. Okay, we have two types of liabilities: non-current liabilities and also current liabilities. So, and you already know the owner's equity, how to calculate for owner's equity. Okay, now let's look at the statement of profit and loss. Okay, SOPL. Okay, so let's look here. What is the statement of profit and loss? Okay, actually SOFP shows the financial performance. Okay, before this, SOFP is show the financial position, but for SOPL shows the financial performance of a business during a period. Okay, so same goes to SOFP. SOPL also we should prepare during a period. Okay, with accounting period also. Year end, okay, at the year end of accounting period. So actually the financial performance is measured by the profit earned or loss incurred during the period. So in the financial performance or in the SOPL, okay, the name itself is showing that how we are going to do in the format of SOPL. So you should calculate for the profit earned or the loss incurred during the period of your business. Okay, so we need to determine, identify whether your business having a profit or loss. Okay, Ada. Okay, so this is the format for SOPL. So please wait for a while. Hold on class. I want to search for another format for SOPL. So please hold on a second. Where is the format? Okay, so this is again. Okay, so class, this is the format for statement of profit or loss. Okay, we have sales. Okay, so we are not going to look at the detailed format. Okay, so I just want to highlight the important classification inside the SOPL. Okay, for example, sales. Okay, and then we calculate for the uh, purchases. Okay, so purchases is our expenses. Okay, and then we add on the revenues. Okay, here is the revenue, and then less with the operating expenses here. Okay, less with all the operating expenses, and then you will find out the net profit or net loss of the business. Okay, so if you're calculating the profit and then your amount is in positive, so it means that it is profit. Okay, how about there is negative? Negative amount means that your company is suffering loss. Okay, so what do you need to know in the SOPL is revenues and expenses. The two things that you need to know. Okay, but it looks like very simple revenues and expenses. But then there is some details of the revenues. There's some many classification under the revenues and also expenses that you need to know. Okay, so let's look at the revenue first. Okay, for revenues, what does that mean? Revenues is income. Income that generated by the business, okay, either from trading or normal operating activity. Okay, for example, if you sell the telephone, so if you generate the sales, it means that that is income for your business. Alright, so please understand that revenue we will classify into three categories. Okay, please make sure this. Okay, please understand. Okay, for revenues we classify. Okay, other names for revenue we call it as sales. Okay, we classify into three. Okay, the first classification. Okay, the revenue that come from the sales of goods. Okay, revenues that or income that comes from sales of goods. Okay, for example, in the outlet for KFC, okay, KFC is sales of the fried chicken, right? Okay, they offer fried chicken, Kentucky fried chicken to the customer. So if the customer buy the KFC, so means that the KFC generated the sales from the fried chicken itself. Okay, so what else? The example is when you are selling uh, clothes or telephone. So the income or the sales from the business is come from the selling of the clothes or the uh, telephone itself. Okay, that is the first classification for the revenue. Okay, the first classification for revenue or income, it comes from sales of the goods. Okay, so that's why if you look at the format here, okay, the first thing that you need to identify in the financial state for profit or loss is sales. Okay, you look. Okay, the first one that you need to identify is sales. Okay, sales from the goods, sales of the goods. Okay, income from the selling of the goods. Okay, that is the first one. And then the second one is the revenue or income that you earn from rendering of services. Okay, other than doing the business, selling the goods, okay, there is also a business activities that rendering of services. For example, the fees from the tuition fees, okay, the payment from the bills that come from the consultation with the doctors, okay, in the clinic, alright. So the consultation from the maybe from the uh, accounting consultation, okay. That is the revenues that come from the rendering of services. Okay, so that kind of the company did not offer you the goods, but then offer you the service. Okay, such as doctors, okay, offer you services, such as lecturer, offer you lecturing, okay, of the topic, okay, and then such as lawyer, business lawyer, offering you the consultation services. So that is number two types or classification of revenues. Okay. Another one is the revenues or income from other we call it other sides. Okay. For example, from the use of the business asset by others. Okay. If your business, okay, having an empty room that you uh, can offer to others to rent, okay, so the rental come from the service. We call it as the rental income. So it also classify under the revenues, but it is other income, where that we put, okay, other income details in the statement of profit and loss. Okay, after you having the gross profit, okay, after you calculate for the gross profit, okay, by uh, calculating with the format and the formula. Okay, later on we will discuss on the format of formula. Okay, after you are getting the gross profit amount, so you need to add on other revenues. Okay, other revenues is including what is that example: discount receipt, rent receipt, commission receipt, and interest receipt. All the things, all the details that you receive of from others, okay, for your business. Okay, it means that is the revenue. Okay, revenues that from the use of the business asset by others. Okay, so interest income means that the cash deposit, okay, you already deposited some amount in a bank account, okay, so in terms of investment maybe, and then after that you will get the interest income. Income is also we also known as receipt, interest receipt. So if you find out in rental income, interest income is also the same with interest receipt, rental receipt. Okay, all the things that you receive, it means that is revenues or income. Okay, please remember that. Okay, how about others? Example is royalties. Okay, if you have any copyright, okay, you get the royalties. Okay, that is also other, comes to other income in under the other income revenues. Okay, so what else is dividend income or dividend receipt? Okay, it also types of other income under revenue. So where we get the dividend from the investment portfolio, especially in shareholders, okay, investment shares. Okay, so please remember three types of revenue: whether sales from the goods, okay, rendering the service, okay, income from rendering the service. The third one is other income. For example, rental income, royalties, okay, investment income. So anything that the name is income or receipt, it means that is under revenue. Okay. So can you understand what is the term of revenue? Is there any question that you want to ask? Okay. So if you don't have any question, let's continue. Okay. So what else? The classification that you need to know for SOPL. Another one is expenses. Okay. Expenses, apa dia? Expenses is the cost incurred. Okay, thank you. Expenses is the cost incurred in the normal course of business to generate revenues. Okay, in order for you to generate revenue, first thing you should buy the product itself. You should buy first, so you should uh, expend your money, and then you will get the goods, and then after that the goods or products you should sell to the customer, then you will get the generate the revenues. That is example of what that is the definition of expenses. Cost that incurred. Okay, cost incurred for the normal cost in order to generate revenues. Okay, so expenses we have four types of expenses. Okay, for example, okay, the first types of expenses is come from the cost of sale. Okay, please remember, expenses is the cost incurred to generate revenue. So for sure, before you have the product to be sold to the customer, you need to incur the cost first. Okay, so that is cost of sales. Okay, so what is the example of the cost of sales? Okay, the cost of sale, for example, is the purchases of stock. Means that you buy the stock from the suppliers. Okay, if you want to open up the business telephone that sell telephone mobile phone, okay, first you need to buy the telephone from the supplier in China, for example. Okay, so the purchases of stock means that you incur the cost to buy that telephone. It is expensive. Okay, the cost of sale. Okay, other than that, okay, other expenses, not only, okay, we must incur the cost of buying the stock itself, but then you should incur, okay, because the telephone or the stock from the China should include the freight, insurance, and transportation costs. That we call it as the carriage inward for bringing the goods to the business premise. Okay, for example, the business premise is in Malaysia, and then the supplier company is in China. So how they want to post uh, post the all the items, okay, using the uh, transportation, of course. Okay, maybe using the cargo or using the aeroplane. Okay, so all the things uh, is a cost to the owner or the business. Okay, if you look here, okay, where is the cost of sale here? After we find out the sales, and then we should less the sale with the cost of sale. Okay, the cost of sale means that where you have any opening inventory, okay, in your store, okay, you must add on with the new purchases, okay, of the new stock, okay, of an inventory is the amount of the amount of the stock that already in the store. Okay, and then less with the purchase return. Okay, after this we will identify later in another chapter about the purchase return. So, but now for today, I just want to give you the pictures of where is the cost of sale is in the format. Okay, it's under sales, net sales. Okay, after you find out the net sale amount, so you should calculate for the cost of sales. Okay, so the cost of sales in for the first classification is come from the purchases of the stock itself. Okay, the amount, maybe for example, the amount of, where is my slide? Oh my god. Okay, maybe you want to buy 100 pieces of telephone iPhone. For example, one pieces, the supplier gives you 3,000 ringgit, so 3,000 times with 100 is uh, 30, 300,000 for example. Okay? And then you must add on with the carriage inward. Okay, the expenses. Okay, the expenses that you incur to get the for example transportation. Okay, carriage inward other name is transportation. For transportation cost in order for you to get your product or the goods. Okay, so other than that, if you buy the goods from outside, okay, that is a duty on purchases. Okay, you need to pay insurance on purchases. You also need to pay or incur in terms of other than the purchases costs. Okay, so all these things we call it as cost of sale. Okay, so beside that, okay, we also should incur the selling and distribution expenses. Okay, so where that we can find out the selling and distribution expenses. Okay, that is under the operating expenses. Okay, under the operating expenses, you will find out the sales and distribution. Okay, for example, there's salaries and wages of the or commission of the salesman. Okay, it inside the operating expenses. Okay, you will find out. So you must put if there is expenses, commission, sales commission. So you must put under operating expenses. Okay, so that is the selling and distribution expenses in terms of salesman salary and commission. Okay. Beside that, under expenses, okay, we should also have administrative expenses. For example, electricity and water, and also rental expenses. For example, okay, your business, okay, your shop, your company should have electricity and water, right? Okay, to operating your business. Okay, same goes. You need to have a building, for example, for your shop or business. So if you don't have any building, you should rent from the uh, building. Okay, from other parties. Okay, so it will also include, okay, the expenses under operating expenses. Okay, electricity, water, or rental expenses. Okay, other than that, other classification of expenses is finance cost. Okay, for example, interest on loans. Okay, if you have any loans, okay, so you should pay. Okay, the interest under operating expenses. You need to put in under the operating expenses. Okay, where the expenses you should minus. Okay, so if you look at the formula here, format here, okay, all the revenues, okay, revenues, and then you must minus with all the cost of sale. Okay, after that you will find out the gross profit. Then gross profit you must add on with the revenues, all the revenue received, other revenue received. Okay, and then minus with all the expenses, operating expenses especially, not the purchases expenses. Okay, purchases is already inside at the after the sale. Okay, so less with the operating expenses, and then after you already okay, you minus with all the expenses, you get the net profit. Okay, so in simple words, okay, you will in a simple word in the SOPL, you just need to uh, know what is the revenue, what is the other revenue, what is the expenses and purchases, especially expenses for purchases, and also expenses for operating the business. Okay, you must already in your understand and also have a pictures of these two things. Okay, revenue and expenses. Okay, because of the all the things that I explained, okay, you should find out, okay, you should know how to put inside the format. Okay, so where is the purchases, where is the sales, where is the revenue, you should know where to put. Okay, so you should know the types and the example of the expenses and revenue. Okay, please make sure that you know how much. Okay, what is the sale revenue? Okay, first one is the revenue of the sales of goods, and then other revenue is come from other income. Okay, same goes to expenses. Expenses, we have the first one is the cost of sale. That is the first one is the purchases itself. Purchases atau it means that we the cost to buy the goods, that is purchases. Okay, and then add on with all the expenses to get the cost to get the goods of the or the product. And that operating expenses you must less also in order to get the net profit. Okay, you need to know the selling and distribution, administrative and finance costs. Okay, can you understand about SOPL, about the expenses and revenue? Okay, very good. So let's look at the uh, equation. Okay, okay, this is the accounting equation. Okay, the basic one, we already discussed in the statement of financial position. Okay, we already discussed in the SOPFT. Okay, so the basic accounting equation is asset is equal to owner's equity plus liability. Okay, this is the basic. So actually, this basic accounting equation we can expand or extend the basic equation into the most important or extended accounting equation, that is ADECRL. Okay, So ADE-CRL is the extended accounting equation that we will include the formula in SOPL and SOFP together. Okay, together in the extended accounting equation. Okay, for the first, we already discussed. We find we found the basic accounting in the SOFP. Okay, that is asset is equal to owner's equity plus liability. Okay, so if we extended the accounting equation, okay, I don't want to discuss the detail in detail how the basic accounting uh, will extend it to the ADECRL. Okay, I am afraid that you are not understand what I'm talking about. So you just imagine. So the basic accounting is for calculating the format in SOFP. So an extended accounting we use also in the SOPL. Okay, so we just combine the format in SOFP with the format for SOPL so that our new extended accounting equation will be like this. Asset plus drawing plus expenses, okay, is equal to capital plus revenues plus liability. Okay, so you should know the accounting equation is going to be like this. A is for asset, D is for drawing, E is for expenses. Okay, it's equal to C, capital, plus with, okay, I don't want to put the sign of plus here. I just want to put the element. Okay, C is for capital, R is for revenue, L is for liability. So at the end of the accounting equation, if you combine the element for SOFP with the SOPL, okay, you will find out the extended accounting equation will become ADE in the same category side. We call it as ADE ni. ADE is a right side, the left side. Okay. Okay, CRL in the right side. Okay. Please remember that I've already told you that okay, accounting is just a technique. You just follow my techniques and then it will be easier for you to understand, okay, and then it will be easier for you to know how to prepare for the financial statement. Okay, just follow here. Okay, the accounting equation, okay, if you combine basic accounting equation, whereas the element of SOFP is just there, asset, owners, equity, liability, and then after that we expand and adding with the element of SOPL, so the accounting equation will be ADE is equal to CRL. Okay, if you understand the accounting equation, it will help you for the techniques in double entry after that. Okay, we should know the basic accounting equation first and also the extended accounting equation. This is just the technique. Alright, class? This is the technique that you need to understand. And then this understanding is very important for you to do the double entry after this. Just bear in your mind, just remember. Okay, in accounting, we have the techniques of equation where ADE is equal to CRL. Okay, where that you get ADE is equal to CRL. It's from the basic accounting equation. Asset is equal to liability plus equity. That is the basic. And then we extend all the expenses to ADE CRL. Okay. So you already know the drawing items is inside the SOFP itself. Okay. Asset is inside SOFP. Drawing is inside the SOFP. So that we combine with the expenses under element SOPL. And then is equal to capital. You know already the capital is inside the SOFP element. And then revenue is under SOPL elements. And then you already know the liabilities is come from the element from SOFP. So you know that the standard accounting equation is come from the element of SOFP and SOPL that we combine together in terms of mathematical equation. So at last we got the extended accounting equation ADE is equal to CRL. Okay, so after this I will repeat again. I will ask you, okay, can you please explain to me what is the formula or extended accounting equation that you know? So the answer is ADECRL. Okay, please. This is the most fundamental, this is the most basic accounting equation that you need to understand. Okay, this is just a technique, class. This is just a technical part that you need to understand. Very fundamental, very basic that you must know. Okay, as an accounting student means that accounting student that uh, means that you need to prepare for the financial statement. This is the most basic one. Okay, you know ADECRL. So you must know asset is from the left side. Okay, drawing is from the groups of the left side. Expenses is from the group of left side also. Okay, capital, revenue, and liability is come from the right side. It's different from the ADE. Okay, so we can conclude or we can summarize the accounting equation into, okay, accounting equation for SOFP elements and SOPL elements into ADE is equal to CRL. Okay, class, can you understand? Yes, okay. So I think I just want to stop here because it's okay. I just want to stop here. Maybe it's very near to afternoon, right? So we will continue later for the effect. Okay. So I want you to digest the what we call the SOPL and SOP, what of the learning outcome for today until the equation. Okay, before we do after this, okay, next class or next week we will continue on the accounting equation, the effect itself. Okay, and how to calculate and how to look at the business transaction to look at the effect. Okay, more depth. Okay, all right. So you just digest the extended accounting equation until ADECRL. Okay, so please remember. Okay, We are in the chapter 3. Okay, not completed yet. Okay, so next week we will do the tutorial. Maybe I will be replaced by another lecturer. Okay. Okay. So any information I will inform you in the WhatsApp group. Okay. So is there any question before we left? What is that? I can't. Bitcoin. It is haram. It's already discussed by the Sharia. Sharia. Okay. Yeah. Anything else? Arfat and also Sarah. Okay. I assume there's no question from Sarah and Arfat. Okay. Thank you so much for joining for the class today. I will post the recording in the WhatsApp group. So please make sure if you don't understand, please look, go through one by one of my recording and then please understand uh, by reading or by looking at my recording. Okay, it's very important for you to move to another parts of accounting. Okay, so that thank you so much and have a good weekend. Bye. Assalamualaikum.